Cast is now starting. All attendees are in listen-only mode.
Good morning, traders. Can you hear me and see my screen? If you could just type yes in the questions. And let's get started here because I want to show you, it's just about to occur. We have oil inventories this morning. And for those of you who are new here and others, it doesn't matter. I just want to show you how liquidity behaves during a fundamental release. Okay, pretty fascinating stuff. So let me know if you can hear me and we'll get started. All right, excellent. Okay, thanks guys, appreciate it. Okay, first things first, let's just go through, I got to go through the risk disclaimer. Welcome to the Bookmap platform details webinar. This is Bruce at Bookmap. Risk disclaimer: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. So before we get into some of the details about Bookmap, let's just jump in here and take a look at this fundamental release. Crude oil. And hold on just a minute. We're looking at the J contract for April. And there we go. Okay, so here is the 1030 release. We can see that actually not a lot of volatility. You can see actually some before. So it looks like maybe someone knew something here and drove the market lower before 1030. And you can see just some back and forth here. Okay, well, obviously the follow through to the downside. Let's see what that number is exactly. I'm just curious myself. So, okay, so it's 3 million barrels. That is bearish. So a number that is higher means that there's more supply. If there's more supply, then a price will probably go down. And that's indeed what it is doing. And this is in line with kind of bigger picture stuff with the stock market going down and the interest rates going up. So, you know, kind of slowing down the economy, which will slow down the commodities as well. All right, so just some fundamental perspectives here, and let's just take a look here quickly at what's going on. Not really the most interesting release here. We've seen so many other releases, and it's just fascinating to see how. We'll note here, I mean, usually what you see is, let's just right click here and go through the heat map settings. And let's bring it up here quite a bit because we want to see where they start to really, you know, start pulling liquidity here, because you will see it, and it's just so distinct. Here's 15 seconds beforehand, and it's actually quite a bit of liquidity still in the market. So funny to see. Usually you'll see the algos will turn off right at that moment. I mean, you can see that here. You know, it's not really very distinct at all. This is kind of funny. They're staying in, and they're willing to absorb at these areas here and stay in the market. You can see how some of the algos, see this little line right here. You can see when it starts to shut off, and here as well. See how this some of these players are getting out of the market. You know, just a little bit after 30 seconds before the release here. And starts to get kind of darker or thinner here. Okay, it's just less liquidity. When there's less liquidity in the market, here's a better picture. But you can see that some of these guys, they wanted to stay in, and they're getting filled, right? So they're absorbing on the way down here, and makes me suspicious because of this move beforehand here. So something's up here. Someone knows what they're doing, but. Anyway, usually people will not, they don't know what the number is going to be. So what do? They get out of the market. There's too much risk. Okay, it's a risk that they don't want to take. And what happens when there's less liquidity? There's more volatility. Okay, and why is that? Okay, it's because there's fewer players, so it doesn't take much money to move the market very, very quickly. Okay, if someone's bidding, let's say the auction is for $10 for something, and people are $1 wide usually. People are at on the bid at, let's say, $9, and they're offering at 10. There you go, $1 wide. Well, if there's risk and that buyer says, well, I don't actually want to bid now at 9, but I'll buy it down at $2, and they pull their liquidity and go down to $2. Well, if someone's going to sell and hits the market sell button, they're going to get filled down at $2. That's what happens. Okay, and all those other price levels, there's no one there, so it'll immediately go down. And that's usually what we see. You can see that actually a lot of that algorithmic activity starts to turn back on in these areas, as you can see. Okay, with my heat map setting, even more starting to come in here. Anyway, thought it would be kind of interesting to see. Wasn't really that interesting. There's been times where we just see just amazing stuff. There'll be one guy down here providing liquidity, one guy up here providing liquidity on the offer. Price will go right down to this guy and then right back up to this guy. And everything else in the middle here, there's very low liquidity. It trades right through it like a knife. All right, not today though. But anyway, let's bring back to our regular settings here and take a look at what's going on here. Okay, just a little bit of follow through, and then we'll get to some of the regular presentation here. Okay, nice move down. We're at 62.50, the figure here. Okay, and you can see that volume profile starting to build out here. Here's our lack of liquidity right here, right? Here's what it looks like. Okay, so although we noticed there was more than usual, quite a bit more than usual. Look how much traded here compared to what's trading here after and what's trading before. Okay, so you can see the difference here, right? So we have that opportunity now. This didn't auction quite right. If the buyers start to step in, we'll probably find a market in this area here. All right. So anyway, some things to start to piece together in terms of order flow and the volume profile, and starting to understand some of those how they kind of merge together pretty nicely. Okay. All right. Before we get ahead of ourselves, let's go back here and start to define what Bookmap is for you new traders. I see quite a few new traders in the room. It's great to see, so welcome, and quite a few regular Bookmap customers as well. So ask questions. That's what this webinar is for, and how you do things, how certain things are shown, and if you have a lot of questions about what I just showed here in Bookmap, we'll get to some of the details in just a minute. Okay. Okay, so if you're interested in Bookmap, go to bookmap.com. The product comes along with education. There's a 4-part educational course. Okay, it's available anytime, so you can watch it at your leisure. And then there is a live webinar. Okay, it goes for about an hour, and it's following this webinar every day. So in about 22 minutes, we'll have another advanced order flow webinar. What we go through in that course is what we go through in the live webinar. So you can learn about it in the course and then see it in the live market as it unfolds. So in that live advanced order flow webinar, we put the context of the order flow together and start to anticipate future price movement. Okay, so we back up our education, pretty strong combination here, and that's the concept. Okay, so go to bookmap.com. Let's scroll down a bit. There's an intro video here if you want a little bit of insight, just general information about Bookmap, some testimonials, NASDAQ total view feed. Bookmap is not only for futures, it's also for US equities through this NASDAQ total view. Let's go down a bit further. Connectivity. Okay, so let's define what Bookmap is first. We are a visualization software trading platform. Okay, you will need to provide your own data because we are not a data provider. Okay, this is pretty typical for futures. If you guys aren't familiar with that, I'll show you in just a minute where you can get some free trials of data feeds. You also note some platforms that are in here: NinjaTrader, TTX Trader Pro, and Interactive Brokers Traders Workstation. Okay, these three platforms here, we connect via the API of these three platforms. So you have that option. However, we are a platform just as they are, and we prefer just to make things simpler to get the direct data feed. So go directly to or connect your Bookmap directly with CQG, Rhythmic, Gain, IQ Feed, Transact, and then Dev Experts here. Now, Dev Experts is for that NASDAQ total view, okay, so US equities. So you have that option as well. Now, we also connect to the GDAX exchange for digital currencies, and we can look at some of those if you like. Let me know, okay? All right, some of the packages that are available. You can subscribe monthly or yearly. You can see there's digital and global. Okay, so the digital version here is free. It is only for one currency in the GDAX exchange, and that's all you get. Okay, you also get a US equity, but it's delayed feed. Okay, so its full version, it's a working copy of Bookmap. The difference is that you get one currency. You also just get the basic education. You get limited support, and you cannot trade in this with this version, or you cannot use the replay data mode or record any data as well. Okay, so it just gives you a feel for what's going on. If you want more, then subscribe for a month and see how it goes. So, for example, the Digital Plus, okay, what you get for $37 a month is real time for GDAX. You get that for the free one as well, but only one currency. With the Digital Plus, you get up to 20, okay, instruments here. You can record and replay all of your data. You can actually take trades from the Bookmap chart, and those, if you have a GDAX account, you'll get filled in the GDAX account. Okay, you also get the delayed data for US equities. You get the advanced education that I previously mentioned, and access to those advanced order flow webinars. Okay, the global version here includes everything in digital, but you also get the ability to connect to futures data and US equities data. You also get the advanced education and full support. Global Plus is the same as Global, except that you also receive the one-click trading to be able to trade right from the chart, and our cache of proprietary indicators that look specifically at order flow. Okay, so large lot tracker, imbalance indicator, iceberg detector, and correlation tracker. Okay, a lot of these here we're starting to not only identify the order flow, but specific players in the order flow, like larger players. Okay, with a large lot tracker or iceberg detector, larger players use hidden orders because they don't want to show their limit orders in that order book. Okay, now here's that feed or free trial here for data. Click here. There's 4 different providers that offer a free trial for a couple weeks each, I believe. If you want some of the details on all these plans up here, you want to see like exactly what you're getting, you can click here. And if you have questions, click here. All right, you can follow us here on Twitter, up-to-date information about what's going on. And then the YouTube page here. This is the basic education, for example. So if you're new, I would suggest watching some of the intro videos. Click on the playlist here. Some of the features, click here. And then these order flow video snippets, these go through the same information that we go through in the advanced order flow webinars. They're just very concise, okay? And we go through this phenomena in detail in the context of it in the live market. Okay, all right, well, let's take a look at Bookmap. How's our crude doing? Okay, so we're down below, accepting down below 62.50, where we paused here for a bit. and it's continuing to go lower here. Okay, so we'll see. Anyway, I wanted to show that we usually do look at the S&P E-mini. Okay, and here we go. Okay, so Jay, I got your comment there. All right, let's take a look at it. Okay, so look at this big wall of liquidity up here. All right, above 61. Okay, it's a lot of liquidity up here. Very clearly seen in the order book. Okay, so for example, this is just a really important point to get across. For those of you who aren't familiar with liquidity and what Bookmap is showing here, this is critical because why did price stop up here? Okay, you may be looking at Fibonacci levels, you may be looking at a footprint chart that shows volume, etc. Well, or you may be looking at candlestick patterns. Okay, that none of them are telling the story of what's going on. Okay, here's the story. This is why. It's because there's high liquidity up here and there's not enough buyers to take on any of it. Okay, no one wants any part of it. Okay, you can see it's trying here. Nice clusters of aggressive buying up into these areas here. Not even able to make a higher high. Okay, so there's no buying pressure, right? Or not enough. Okay, so we're rotating lower to find where those buyers are. Okay, at a discount here. Buyers are going to step in down at these areas here. Okay, they just came down below the swing here at 55. Okay, we need to gauge the context. Are we going to go lower? Are sellers in control here? Okay, nice little cluster of selling here. I would anticipate a little bit further move down to the downside here. Okay, maybe down to 27.50. Why is that? And that's where the high liquidity is. Okay, it's also at the swing down here, as you can see. Okay, this is the low of the day. Okay, we might be revisiting that right now. Okay, so it's important to, now I'm not knocking those other strategies, it's just important to note here something that is really pertinent to understand, and that is high liquidity and how the market reacts to this high liquidity up here. Okay, if you're looking at Fibonacci levels, that's great, or if it's pivot points, that's great. Just put it together, and you've been trading it for years, it's fantastic. Okay, just put it together with the order flow and the auction. Okay, when you see something like this, okay, it's telling you something, right? If this is a a 121 or a 127 Fibonacci level, or if it's R1 or something like this for your pivot level, that's great. Now you have a lot more insight. Okay. And the order flow trading is giving us follow through. Okay, so for those of you who are new, what is this big block in the heat map? Okay, so let me define some of these elements here in the chart. Okay, so this Bookmap chart, you see these dots and you see this heat map. Okay, now the dots are taking place on the historical best bid and offer. There's really only 3 elements on this chart. That's really it. Historical best bid and offer, volume on that historical best bid and offer, and the heat map. Okay, so let me go through and define some of these things. And we're going to do that using a candlestick chart because we're all familiar with that. Okay, here's a 5-minute candlestick chart. Okay, so now we're all familiar with this view, and let me go through and describe what we're looking at in a candlestick chart. It's just open, high, low, and close of a 5-minute period. Okay, and we've been looking at this for years, trying to gauge, buying pressure, selling pressure, putting together candlestick patterns with indicators that are derivatives of time, price, and volume that lag. Well, all of that data is maybe it can be useful, but it's just not giving you a very transparent view of the market. Okay, it's not answering all sorts of questions here. So for example, what happened between these 5-minute periods? Okay, there are microstructures in here. There is volume that trades within that microstructure that gives us tremendous insight to how price might behave. Okay, and then finally, we want to see where they're lined up on the bid or on the offer. Okay, like we noted, this big block up here. Look at it now. We don't see anything, right? And you wouldn't know that. And even if you looked at your dome, well, you know, it may show that big block here, but I'm going to show you that historical view, how we're able to use that information on much higher time frames. Okay, so let's turn on just the historical best bid and offer. Okay, and these are the microstructures that I'm talking about. Let's just zoom right in here. Okay, so we went sideways for a bit in this little structure here. We broke it, returned back into it, broke it again, returned back into it. Okay, this is that resistance to that big block that we saw up here. Okay, which we don't see now. Okay, we're going to see that the sellers came in right around here probably because we broke down below the microstructure. Okay, that you cannot see in this candlestick chart. We're going to see that they drove price lower and we broke down below this structure. Okay, and you can see, note the little swing right here, and note the return right back to it. Okay, and then continuation here. Okay, so we're getting down to our 2750 level. Looks pretty good. We'll take a look here in a minute at the current order flow. But note the way that price is down below this level and it's accepting down below this level here. Okay, this is very key to understand here. So let's look at now the volume. Okay, that traded within the historical best bid and offer and microstructures. Okay, not even your footprint chart is going to show this because your footprint chart is going to aggregate that data within a 5-minute period, or a bar rotation or volume period, whatever it is, it's still aggregating the data. So you're losing out on microstructure and also speed of these moves. You're not going to see it. That's the advantage that you get looking at historical best bid and offer unfolding instead of an aggregated period. Okay, so yeah, here's our selling. You can see here a big cluster of selling starting to drive price lower, and it just continues to drive price lower. All right, so let's see. It was a nice cluster of volume up here. I liked it. It looks pretty good. Ultimately, you can see we retested back up here, failed to get above any sort of high here, and there's no volume that traded up here on this swing. Okay, again, you wouldn't see that in your footprint chart. Okay, it's just going to aggregate it. This is exhaustion. This is what exhaustion looks like. Came up here and nothing traded on this retest. Okay, sellers note that, and here they hit the bid pretty hard. Okay, and that's what drove price down below this little microstructure. Okay, all right, so let's just zoom in here, and I want to show you these two elements and clarify it so you understand what it is exactly your Bookmap is showing and how you can use it. This is extremely simple and objective data. It's just historical best offer. Here is the red line. Historical best bid is the green line. That's it. Okay. The green dots that you see here, these are market buy orders. Okay. Someone crossed the spread. They paid up for it. They wanted in the market here immediately. And they didn't provide liquidity. They didn't wait. They just took liquidity off of the best offer. And a green dot paints here in Bookmap. Okay, red dot is a market sell. This is the aggressor classification of volume. Okay, it's important to note that because that's the way we display the volume. Okay, it's pretty typical, but other platforms do it differently sometimes. All right, so that's it. and you'll note that, we can zoom into these areas here. For example, a little cluster here. In fact, let me bring up the dot size. You can see that some of these turn into kind of a pie-shaped volume dot of both buying and selling. It's because so many transactions occurred here so quickly that we display the overall delta and size and shape of the volume. Now, if you want the specifics, you've got it. You can just hover over using your data tip tool here, and you get the date, okay, the precise time, what was on the ask here, 89 contracts at this price level, and the volume. This volume dot is for 6. Okay, let's zoom into this area though. Okay, we're going to see that that's not actually true. It's actually many different trades here. Okay, and now we're down at microsecond level. Okay, millions of seconds. Okay, and we're recording all of this data here. We're recording every single market event. None of this is aggregated. Okay, we can hover over this now. We can see this is a volume of 1. Okay, this is volume of 1, and this is for 4. Okay, is it 4 or was it actually more than that? Let's just zoom in here and verify. Now we're down at nanosecond data levels. And yeah, it looks like it's one trade event for volume of 4. Now as I zoom back out, okay, note how we'll just visually, graphically consolidate that into a bigger dot. Okay, so that's what you're looking at in terms of volume. Okay, and it's important to understand that so that we have the context of this volume. All right. Okay, and let's bring down the dot size a little bit, and let's also take off the candlestick chart and put on the heat map. Okay, here's the third element we're looking at in the chart, and that is the liquidity heat map. Okay, so what is it, right? How is it derived? These are offers up here. These are traders that are willing to offer, and they're sellers. Okay, well, let's zoom into current market and let me just demo the dome here so that you understand what you're looking at. All right, so we're lower now. We went down, actually, we traded through the 50 level, as you can see, and look what occurred here in the book. Not only did we trade through it, we see that now there's high liquidity over here on the offer. They were on the bid, now they're on the offer. Okay, so is price going to accept down below 50? It's already doing so, and we also see that traders are lined up to be sellers up at these levels. Okay, we even see in the book here that they're trading. They want to be sellers at lower levels. Okay, so let's zoom in here and let me show you what I mean here in the heat map. Okay, so here's our dome. Okay, everything to the right of this vertical white line. Okay, this is the current market. All right, so this is the current best bid and offer. This number is the last traded volume. Okay, here's our price ladder here. Okay, I've got it set for every 4 ticks, so every whole number. I just prefer that. And then the COB column here. This stands for current order book, and this is your dome. Okay, your depth of market. These numbers here represent contracts at these price levels. Okay, and this is the liquidity. These are sellers willing to provide liquidity. These are buyers willing to provide liquidity on the bid. Okay, so when these numbers change, okay, you're going to note that the heat map changes here as well. So we're taking these numeric values, transforming them into a graphical representation in the heat map. Okay, so the numbers change, the heat map changes. Now, all of that is recorded and then projected onto the chart historically. Okay, so that's all this heat map is. And you can see how they've been adding and pulling liquidity at these levels here. This is the adding and pulling of liquidity. Okay, so if it's dark gray, then it's going to be low liquidity. If it's orange, it's very high liquidity. Now the heat map is changing here. Okay, the reason being is I'm so zoomed in, and as soon as new data comes in here, it will scale. If I let's say, for example, up here, 3,000 contracts come in. Well, that's going to be the brightest area, and it's going to scale the rest of the heat map in accordance to that very high liquidity. Okay, so that's all that's happening there. Anyway, here now, what we're able to do due to this high liquidity here, we're able to understand the context of these traders. Do they want to buy or do they want to sell? Okay. Well, we're getting our answer here. This is fake liquidity, basically. Okay. It's showing that they have no intent to trade here because price came up toward them, and what do? They pulled out of the book. Okay. They don't want to trade, right? So let's see if these guys up here at 48 3/4 want to trade. Okay. So we're making a distinction very easily and clearly between what's fake and what's real. Okay. So for example, let me show you what real liquidity looks like. We can zoom into this 50 level here. This is your very clear and objective view. Trading into very high liquidity here, and they're staying in the book. 985 contracts just traded here. Okay, this is real liquidity. Okay, so when other traders say, well, I don't really look at the dome, and the reason being is it's all fake anyway, well, that's just not true. It's just that they can't, it's so hard and difficult to see that distinction in a dome with numeric values. Okay, now you can. Not only can you see it now in Bookmap, we can zoom out and we can note other huge areas and how they're behaving in the book, okay, and how price is relating to it. We're able to use our dome now, not just for current market, we're able to use it for the historical market as well. Okay, so anyway, let me leave you at that. For those of you signed up for the advanced order flow webinars, we'll jump over to that webinar and we'll see you there. Okay, thanks. Bye.